What is college savings? College savings refers to the process of setting aside money to pay for a child's or individual's higher education expenses such as tuition, room and board, books, and other related expenses. There are several ways to save for college, including savings accounts. A simple way to save for college is to open a savings account and make regular deposits. This money can be used to pay for college expenses when the time comes. 529 plans. A 529 plan is a tax-advantaged savings plan designed specifically for education expenses. These plans are operated by states or educational institutions and offer a variety of investment options. Prepaid tuition plans. These plans allow you to pay for college tuition at current prices, even if your child does not attend college for several years. Coverdell Education Savings Accounts, ESA. Coverdell ESA is a savings account that allows you to save for education expenses, including college expenses, on a tax-advantaged basis. UGMA, UTMA. UGMA, Uniform Gift to Minors Act, and UTMA, Uniform Transfer to Minors Act, are custodial accounts that allow you to save money for a child's education on a tax-advantaged basis. Does the government provide it? The government does not directly provide college savings plans, but it does offer several incentives to encourage individuals and families to save for higher education expenses. These incentives include tax benefits. Contributions to certain types of college savings plans, such as 529 plans and Coverdell Education Savings Accounts, ESA, are typically tax-deductible or tax-free when the money is used for qualified education expenses. Financial aid. Depending on your financial situation, your child may qualify for financial aid when they attend college. Some types of college savings plans, such as 529 plans and Coverdell ESA, may not be considered assets when determining financial aid. Education tax credits. The government offers tax credits such as American Opportunity Tax Credit and Lifetime Learning Credit, which can help offset the cost of higher education expenses. Additionally, some states have their own college savings plans and they may also have their own tax benefits and incentives. What are the pros of a college savings plan? A college savings plan, such as a 529 plan or Coverdell Education Savings Account, ESA, can offer several advantages, including tax benefits. Contributions to college savings plans are typically tax-deductible or tax-free when the money is used for qualified education expenses, which can help you save more money for college. Flexibility. Many college savings plans offer a variety of investment options, allowing you to choose an investment strategy that aligns with your risk tolerance and financial goals. Control over the funds. You can use the funds for a wide range of qualified education expenses, including tuition, room and board, books, and other related expenses, and you have control over the funds, unlike some financial aid options. No income restrictions. Unlike some financial aid options, college savings plans are not restricted by your income, so anyone can participate regardless of their income level. No age restrictions. Some college savings plans, like the 529 plans, have no age restrictions, which means the account owner can use the funds at any time to pay for their own education or the education of a family member. Gifting. Some college savings plans, like the 529 plans, allow friends and family to contribute to the account, which can be a great way to receive gifts that will help pay for college. Account ownership. With some college savings plans like the 529 plans, the account owner retains control of the funds, regardless of the beneficiary's age or decisions. What are some cons? A college savings plan, such as a 529 plan or Coverdell Education Savings Account, ESA, can also have some potential disadvantages, including limited use of funds. The funds in a college savings plan can only be used for qualified education expenses, such as tuition, room and board, books, and other related expenses. If the funds are not used for these expenses, there may be penalties or taxes. Limited investment options. Some college savings plans may have limited investment options which can make it difficult to align the investment strategy with your risk tolerance or financial goals. Risk of loss. As with any investment, the value of the assets in a college savings plan can fluctuate, and there is always the risk of loss. Penalties for non-qualified withdrawals. If the funds are withdrawn for non-qualified expenses, it will be subject to taxes and penalties. Complexity. College savings plans can be complex, and it can be difficult to understand all the rules and regulations associated with them. Potential changes in the law. College savings plans are subject to changes in tax laws and regulations, which can affect their benefits and restrictions. State-specific. Some college savings plans, like the 529 plans, are run by states, so the benefits and restrictions can vary depending on the state you live in. Contribution limits. Some college savings plans have contribution limits, which can limit how much you can save for college. How much does it cost? The cost of a college savings plan can vary depending on the type of plan and the specific details of the plan. Savings accounts. Opening a savings account to save for college is generally free or low cost. Banks and credit unions may charge a monthly fee, but it is usually low. 529 plans. The cost of a 529 plan can vary depending on the plan and the state it's administered by. Some states offer plans with no enrollment or maintenance fees. Other plans may have an annual fee, which can range from 0.25% to 1.5% of the account balance. Prepaid tuition plans. The cost of a prepaid tuition plan can vary depending on the plan, the state it's administered by, and the type of institution. Some states offer plans with no enrollment or maintenance fees, while other plans may have an annual fee. Coverdell Education Savings Accounts, ESA. Coverdell ESA has no annual contribution limits, but the income limit for contributors is $95,000 for single filers and $190,000 for joint filers. Why is it important? Saving for college is important for several reasons. The cost of college is increasing. The cost of college has been rising steadily over the years, and it's likely to continue to rise in the future. Saving for college can help you prepare for these costs and reduce the amount of debt you may need to take on to pay for higher education. Financial aid is not guaranteed. While financial aid can be helpful in paying for college, it's not guaranteed, and it's not always enough to cover all the expenses. Saving for college can help you fill any gaps in funding. Tax benefits. Many college savings plans, such as 529 plans and Coverdell Education Savings Accounts, ESA, offer tax benefits, which can help you save more money for college. Control over the funds. You have control over the funds in a college savings plan and can use them for a wide range of qualified education expenses, including tuition, room and board, books, and other related expenses. Flexibility. College savings plans offer a variety of investment options, allowing you to choose an investment strategy that aligns with your risk tolerance and financial goals. Preparing for the future. Saving for college also helps to prepare for the future and plan ahead, as college costs can be a significant financial burden, and saving early can help to spread out the cost. It's important to remember that saving for college is a long-term investment and should be considered as a part of your overall financial plan. Additionally, it's important to start saving as early as possible, as the cost of college has risen significantly over the years. How do I get started? Here are some steps you can take to get started with saving for college. Assess your financial situation. Before you start saving, take a look at your current income, expenses, and financial goals. Determine how much you can afford to save for college each month and set a savings goal. Research different college savings options. Look into different college savings options, such as savings accounts, 529 plans, prepaid tuition plans, Coverdell Education Savings Accounts, ESA, and UTMA accounts. Compare the benefits, drawbacks, and costs of each option to determine which one is best for you and your family's specific needs and goals. Open an account. Once you've selected a college savings option, open an account and start making regular contributions. Make contributions automatic. Automating your contributions can make it easier to stick to your savings plan. Many college savings plans allow you to set up automatic contributions, so the money is automatically transferred from your checking account to your college savings account each month. Monitor and adjust your savings plan. Regularly review your savings plan and make adjustments as needed. Keep track of your progress and make changes to your savings plan if your financial situation changes. Seek professional advice. Consult with a financial advisor or a college funding expert to help you determine which college savings option is best for you and your family's specific needs and goals. Keep in mind the tax benefits. Make sure to research and understand the tax benefits that come with different college savings options, as they can help you save more money for college. Remember that starting early and being consistent with your savings is key, so do. Are there any special requirements? The requirements for opening a college savings plan can vary depending on the type of plan and the specific details of the plan. However, some common requirements include age. Some college savings plans, like the Coverdell Education Savings Account, ESA, have age limits for the beneficiary. Typically the beneficiary must be under 18 years old. Income. Some college savings plans, like the Coverdell ESA, have income limits for the contributor. Typically the contribution phase-out starts at $95,000 for single filers and $190,000 for joint filers. Residency. Some college savings plans, like the 529 plans, are run by states, so you may need to be a resident of the state in order to participate in the plan. Beneficiary. Some college savings plans require you to name a beneficiary for the account, typically a child or a family member, who will use the funds to pay for college expenses. Contribution limits. Some college savings plans have contribution limits, which limit how much you can contribute to the plan each year. Withdrawal restrictions. Some college savings plans have restrictions on when and how you can withdraw the funds, and may have penalties for non-qualified withdrawals. It's important to research and understand the different options and their benefits and requirements, and also to consult with a financial advisor to determine which college savings option is best for you and your family's specific needs and goals.